Okay, I think you can all see my screen, or it's still loading. Let's give it a moment. Okay, there we go. All right. So let's do it. Errol, I guess you'll record it, right? Okay. So hello everyone. My name is Ilan Asbel. I am currently the CEO at Autochartist. I'm one of the original founders of the company. I've actually increased my webinar schedule quite a bit over the last few months. We're doing a few webinars a week now. We're doing a webinar at this time of day, which is kind of early morning US. We're also doing ones later on in the day for the people in Europe. And we've got quite a good turnout today, actually, quite a huge amount of registrations. I do know that there was a bit of confusion around the time of today's webinar. I apologize for that. Sometimes I do have a bit of a crazy travel schedule, so things have to be moved around a bit, but to fit around me. Yeah, thank you for joining us. This recording will obviously be available I think from tomorrow on our YouTube channel, youtube.com/Autochartist. So with that being said, let's get right into it. So today's webinar is about setting market appropriate stop loss and take profit levels. Now let me those of you who have heard me speaking before, you've heard me go on this little rant about getting knocked out of the market because of volatility, and I'm going to do this little rant again to all of you. So my just firstly keep in mind that my Autochartist is set to American New York time. Okay, so this is very important to remember during this presentation, is that the time zones and stuff that I'll be showing you is based on American New York. Obviously on the top right hand side of Autochartist you can change the time zone that's applicable to you. Okay, so I just from personal experience, I'm part of another group called the Financial Commission. It's a small kind of self-regulatory body that brokers join, in order to facilitate disputes between themselves and customers. And one of the major complaints that we see at that Financial Commission actually is customers complaining to brokers that they believe that the brokers are chasing their stop losses. What that means is that traders feel that they're taking positions in the market, they're setting stop losses, then the price happens to move and touch their stop loss and then bounce the other way and go back in the direction they initially forecast. And so the whole there's a whole big question around, is the broker manipulating the prices? Is the broker chasing my stop losses, trying to make a loss? And actually, although we're always, as traders, always looking for someone else to blame, right? It wasn't our fault that we made a bad trade, right? The truth is that actually in this scenario, it is very my fault in the scenario I described to you, because in many cases, traders don't set what I call market appropriate stop losses and take profits. And what does that mean? What do I mean by market appropriate stop losses and take profits? Right? Let's look at it this way. And you've got a graph. I've shown you a graph in front of you now. There should be a graph of Euro USD price movement by hour of the day. What I'm showing you right now is proof that if you trade euro dollar, you can expect different amounts of movement at different times of day. Okay, now what this graph shows is basically a 24-hour period along the bottom axis and the movement in price along the side axis, along the y-axis. Okay, so what it shows us actually, that between 2 a.m. and 10 or 11 a.m. New York time, right? I said my Autochartist is in New York time. Euro dollar is trading with a significant amount of movement, right? Its movement is somewhere between 25 and 60 pips, right, for every hour of the day during that time of day. And during when the US market opens between 8 a.m. New York to 10 a.m. New York, that is when the FX markets are, or the euro dollar is trading the most, right? Somewhere on average around 50 to 60 pips for every hour during those 3 hours. Now, essentially, many people in the U.S. Seem to believe that that New York is the center of global financial markets, and that might be true from a stocks perspective. But when it comes to trading foreign currencies, that is not the situation at all. The majority of the trade as a whole happens during the UK session, during the European session. In fact, London is primarily the hub where all foreign currency transactions actually happen, and you see that quite clearly by how much trade and how much volatility happens during the UK session. So let's talk about trading euro dollar, right? So if you are a professional sitting in the US trading euro dollar, okay, and you are trading just before you take the kids to school at 7 or 8 a.m. New York time, which is around this period over here, right? And you're placing a trade on euro dollar, right? And you place a trade, let's say you go long euro dollar, and you decide for some reason, because you've watched a million videos, online tutorials, you've spoken to every expert in the market, and you know that it's a good idea to set a stop loss on your trade. Right? So you go ahead and you contrive the stop loss, let's say a 20 pip stop loss. Okay, a 20 pip stop loss on euro dollar at 8 a.m. New York time. You'll be in the market for 10 minutes, possibly, and you'll get knocked out. But the sad thing is that you're going to get knocked out not because of the direction you chose, whether it was right or wrong. You're actually going to get knocked out purely because of market volatility. You're not even going to give yourself a chance to make money in this market at 8 a.m. New York time if you choose a stop loss of 20 pips. Right? Obviously, I have to balance that statement out. The bigger the stop loss, obviously the more risk you're putting, the more capital you're putting at risk, right? So you could actually be losing more money if you make a trade in the wrong direction. But certainly, I'm in this market to try and make myself some money and not try to lose money. Okay, so you need to weigh up the risk versus the reward. But if you're trading euro dollar at 8 a.m. New York time, you should not be setting a 20 pip stop loss. You should be setting a 50 pip, 60 pip stop loss, maybe even more than that, depending on how long you want to hold your trade. If you want to hold your trade for 2 or 3 hours or 4 hours, maybe until lunchtime during the day or even the evening time during the day, I'll show you how to work out that amount of movement that you need to give the thing. But certainly, you would not be setting a 20 pip stop loss. Conversely, if you're trading in New York, right? You're a trader in New York, and you're trading once you come home from work, let's say 6 p.m. New York time, right? And you trade a 20 pip stop loss, then you'll be holding your position for probably around an hour, right? Because that's the volatility we can expect for Euro USD at 6 p.m. New York time. So that might be more appropriate for your style of trading. Again, if you want to hold your trade for longer than an hour, you may consider setting a stop loss at the 25 pip or the 30 pip level. But so that'll give you an idea of the kind of levels you should be using for euro dollar during different times of day. The same applies to many different, all the different instruments. They trade differently for different times of day. But certainly, if you are not a risk-averse trader, if you want to take a bit of risk, right, and you want to play the volatility, the times of day to trade, without a doubt, well, let me erase all these drawing objects so that I can have a clean screen again, is 8 a.m. to 11, 8 a.m. to 11 New York time, and 2 a.m. to about 5 a.m. London time. Okay, sorry, 2 a.m. to 5 a.m. New York time, or 8 a.m. to 11 a.m. New York time, right? Those are the times to trade euro-dollar if you want a lot of volatility. If you're not looking for volatility at all, right? If you're actually looking not to trade volatility, then obviously the late evening and very early morning would be the time to trade, and everything else is in the middle, right? So I've drawn nice big blocks for you and circles. The circles are the the kind of the average volatility periods, and the tall rectangles are the high volatility areas, and obviously the rectangle size are low volatility times, right? So I invite you to actually go into the Autochartist platform and actually have a look to see when the instruments you trade are actually trading during the day. So here's an example of Australian dollar, Canadian dollar. You can see that most of the trading actually happens 8 a.m. to 10 a.m. New York, and a little bit of a spike around 9 a.m. New York time, 9 p.m. New York time, right? So that is obviously when the Australian market opens, right? And again, you can click on this, and I've only shown you FX pairs, but you can click on this kind of thing and for almost any instruments, right? So let's say you're trading New York Stock Exchange. You're trading Macy's. Clearly, Macy's is only open for a few hours in the day because Macy's is a listed company, and you can see the majority of the volatility in Macy's happens in the first hour of the day, and the rest of the day it trades. Of course, it's a major stock on the New York Stock Exchange, but it doesn't trade obviously as volatile as during the first hour of the day. So keep that in mind when you're deciding on which instruments to trade, how you're going to be trading that. Now, what you might or might not be surprised to see is information like this. This is example of Hong Kong dollar, Japanese yen. So most of you might think that because that is that's an Asian cross, right? The Hong Kong and Japan, right? Or China and Japan, should I say? You would expect the volatility to happen during their morning. However, interesting enough, even for Hong Kong dollar and Japanese yen, the volatility happens in the first few hours of the New York Open, right? So don't just assume by the location of the currency pair or the country that the currency pair represents that you would know when the volatility actually happens. So keep that in mind. I urge you to walk up to the volatility analysis section in Autochartist and actually have a look, see when these things are actually trading or not. Okay, so with that being said, let me quickly switch back to euro dollar. And here we go. So euro dollar. So currently we are actually sitting in a very very volatile time of day. It is 9:15 a.m. New York time, right? And so we're sitting at this time of day over here, which looks like the second or third most volatile hour of the day. Right, so this is a very volatile time of day for us right now. Now I want to show you something else. If you scroll up on the screen, you'll actually get what we affectionately term as the trumpet at Autochartist. Now, the trumpet is really a more granular, more detailed look as to what we can see, what we can expect on the selected instrument at this time of day, right? So This is specifically expected price range movement of euro dollar on a Thursday, 9 a.m. New York time. Okay, so if you were trading 9 a.m. New York time, after 30 minutes, by 9:30 New York time, we expect the trading price of Euro USD to be in this area here, right, between 10913 and 10991. That would be the expected price range movement. And of course, remember, this was generated at 9 a.m. New York time when the price was around 1.095. You may need to adjust that, obviously, for the current price. So at that time, when the price was 1095, these are the price range movements we would expect. So within 4 hours, right, which is at 1 o'clock New York time, we would expect the price to be between 10886 and 11018, and in the next 24 hours between 10831 and 11072. Okay, so immediately what we've got now is the ability to look at euro dollar and see where are the price ranges within which we expect that to be. So now these are not averaged out, right, for every hour of the day, right? This is actually for a Thursday at 9 a.m. for euro dollar. Okay, so now let's switch and to our Metatrader screen. Some of you might be using a different platform. I'll use Metatrader for this presentation because it's mostly the platform of choice for most FX traders. If you're trading stocks using another platform, you can do the same thing on other platforms. So in Metatrader, I found it quite convenient. We have a plugin that shows us the same information. So I think you all can see on the right-hand side of my Metatrader, I've got some little blue lines, right? So those blue lines that we have here are actually the same trumpet information that I showed you a second ago. So for the next 60 minutes, we think the price is going to be trading for euro dollar. We think the price is going to trade between 10904 and 1100. Okay, that's for the next 60 minutes. For the next 4 hours, we think it's going to trade between 10886 and 11018, right? So if you had to take a position now on euro dollar, and it doesn't matter what you used as your entry, right? Whether you used Autochartist or you used a stochastic indicator or moving average on MACD or the weather report, it makes no difference what you choose to make your entry decision. The bottom line is that if you don't want to hold your position for more than an hour, right, then you shouldn't be setting your stop losses or take profits outside of this red band that I just drew for you now. Okay, if you want to hold your position for 4 hours, then that is the band within which you should be setting your stop losses and take profits. Right now, what I like to do personally is before just saying I want to hold my position for an hour or 30 minutes or whatever it is, what I like to do is actually draw these lines in the same way that I've drawn them for you right now, because I want to point out something very interesting to you. Okay, the interesting bit is what I'm always looking for when I'm trading is levels that correlate to other important levels in the history of this instrument. So if I am looking at this level of the 60-minute level over here, right, and the 60-minute level over here, am I seeing any significant levels? So let's just look at this bottom one over here, right, 10904. So is there anything in the past that has been significant? Okay, so there has been something on the left-hand side over here. There's been some consolidation at that level. Not really over here, some consolidation at level and a strong breakout through that level over here. So there's some kind of significance to that level. Did you see that? I'm not sure if all of you noticed. The volatility has just changed. Okay, so let's continue to look at that other level I was showing before. And there was a significant level over here too. All right, let's actually squeeze those in because the expected volatility has actually just changed. The reason it's just changed is because we've moved from one hour to a different hour of the day, right? And we expect the volatility to be smaller now. Okay, so let's have a look at what that looks like now. All right, so now we're looking at price volatility. Do we see anything significant? We see some consolidation here, some consolidation at this level, 2 touching points here. This is looks like quite a significant level, which is a good thing. Over here, the 60-minute one, again, we've got some consolidation over here and over here, right? So I'm looking for markers in the history of Euro USD to see whether that is a significant price level or not. And certainly it looks like to me that there is something significant about this price level. And so if I'm going short, say, let's say I'm going short on euro dollar right now, then I might think, you know what, this is actually a good place to put a stop loss because it shows to me there's been a lot of consolidation at this price point, right? And looks like a significant level to me to keep my position at. Even lately, you can see there's been some consolidation at that level over here, right? Now, if I'm looking at the other side, I'm looking at my take profit. Okay. Now I ask myself the question, you know, is this a good take profit level? And now I'm not entirely sure. There's a bit of consolidation there. Is there something at the 4-hourly level? Yeah, there is a significant turning point here at the 4-hourly level. I'm looking at that point over here. Is there something significant further down? Maybe at this price level over here is something significant, right? So we're seeing a number of significant levels here actually on the take profit side, around the 4-hourly level, definitely the 60-minute level, even kind of around the daily level. There seems to be some kind of interesting level. So we can see straight away that although Autochartist's volatility analysis is not based on the past turning points, right, of the market, it's based purely on the volatility to be expected during that time of day, we can immediately see that there is definitely some significance and correlation to the history of euro dollar and what price points it's actually found as being significant in the past, right? So this is the way in which you need to assess your stop loss and take profits, right? Because if this is a significant level, right, this 10908 level is significant, then you might expect to see some kind of turnaround at this point, right? So it's a good place to potentially put a take profit, wait for a bit of a pullback, and then go short again in the market, okay? Or just take your profit and bank it, right? On the other side, if you're looking at from a stop loss perspective, assuming that I'm going short on euro dollar right now, if you look at the other side, certainly this level looks significant, and if there is a pullback to that level, there might even be a bounce again. But certainly if it goes through that level, then we're potentially seeing a lot of potential for more movement in that direction. We can see that straight away. When the price has gone through that level, there's been a strong movement even further higher up. So certainly this looks like a very reasonable level at which you take your stop loss if you're going short on euro dollar right now. Okay, wow, I've drawn a lot of lines and a lot of graphs. Maybe before I go on to another example, I can open up the table for a bit of a few questions. I don't see any questions coming through right now, which I'm surprised about because there's quite a few people in the room. So I would have expected some more questions. So please go ahead while I move on to the next example and type in some of the questions. The next example that I want to look at is this example on GBP USD. Right? So let me quickly switch to my Autochartist for just a moment. Okay, here's what my Autochartist trumpet says for GBP USD. Right, and now we're going to see the same information on our Metatrader. So let's go ahead and switch to that. Terry, thank you for the question. Terry's asking, how is volatility calculated based on time frame? Okay, Terry, I'm not sure if I understand you correctly. Let me try and answer what I think is the question. We take 6 months of historical data for each instrument, and we base the volatility based on the 6 monthly volatility averages for those specific times of day. I hope that does answer your question. So it's 6 months worth of data. Okay, good. Yes, so Terry says yes, that does answer his question. All right, good. I'm glad. So let's look at this next example, and this will be the last example that I want to walk through. This is GBP USD. Again, it doesn't matter how you decide to take on your trade, but I'm going to look at where I'm going to be setting my stop losses and take profits. Okay, so this is GBP USD 15 minutes. Okay, this is a very, very short-term opportunity. Okay, so Autochartist has given us the times of day. I'm just going to squeeze this graph in just a little bit so we can see all the movement. You can actually notice, the first thing I notice is that the daily volatility is way out of this graph. I'll have to squeeze this graph in a substantial amount to get the daily volatility into this 15-minute graph. So this is obviously 15 minutes. If we move to 30 minutes or 1 hourly graph, obviously the daily volatility will be a lot more prominent. But for now, if we're trading short term, let me open that up a bit so we can actually just see up to the 4-hourly interval. Okay, so whichever direction you're looking at taking, let's look at some of these levels here, and let's look how interesting they are. So the 15-minute level correlates to a level which has been hit a number of times over the last few hours, right? Both on the long side as well as on the short side. Okay, so both of these levels are quite interesting to us. Now, on the if you're looking at the 30-minute level, I would say a lot less interesting on the upside, except for a little bit of consolidation on the top. I would say not a very interesting level, and nor the 60 and nor the daily, although there does seem to be a turnaround here at the daily level. So maybe if the price reaches that kind of level, 156.74 on pound dollar, we might see a turnaround or some kind of consolidation in the next 24 hours. But certainly not that significant. However, if we look on the short side, there are significant levels here. So 30 minutes, not that much, but certainly the 60-minute level looks quite interesting, where there's volatility. There's a lot of consolidation actually happening at that 60-minute period. So the 155.913 level seems to be quite important. So if, for example, you're going short on pound dollar right now, that might be a very interesting take profit level for you. If you're going long, would I set such a big stop loss? I'm not sure. I may consider something a little bit closer, but certainly if it hits that level, that is certainly a significant level. Maybe you'd be setting your stop loss somewhere in the next 15-minute range or 30-minute range. Again, this is a 15-minute graph, right? So I'm assuming you're a very short-term trader, right? So if you're trading a longer term, let's switch that to a 1-hour graph. Let's look at what that information says to us. We'll allow Autochartist 1 minute just to download that data for us. And I'm not sure why it's not loading for me. Sorry, everybody. Give me a moment. As always, when you're actually demoing something, stuff never works. So let's just give that a moment. I see the Autochartist information coming through, but not the volatility analysis, and I do not know why we're not getting the volatility analysis data coming through. Sorry about that, everybody. And I thought I was so well prepared for this presentation. No luck. Okay, I'm not sure why that happened. That's a bit embarrassing for me. I apologize for that. I'm not quite sure why we're not getting any results on that volatility. Oh, in fact, the volatility analysis has completely disappeared now. I'm not sure why that is. Oh, we're getting it on 15 minutes. Let's quickly switch to an hour again and see if we get it. We'll give it one last chance. Otherwise, we're going to call it a day. And then I'll open up the... there we go. Yeah, Krish has confirmed. It does take a bit of time. Normally it's pretty quick for me, but yeah. Okay, so there we go. So let's look at some of the volatility analysis that Autochartist has given us on the 60-minute chart. And let's see the significance of those levels on the 60-minute chart. So obviously on a 60-minute chart, we don't show you the 15-minute or 30-minute volatility, but we show the 60-minute. So again, we notice this level, the expected price range movement for the next 60 minutes certainly touches a very important level over here, right? We can see the consolidation again and again and again, right, at this price point. Certainly, this is a significant level. If I was going short or long, I might consider this as a stop loss or a take profit. In both cases, this price at 155.949, that would be very significant for me. Less on the 4-hourly price point. Let's see on the 20-hourly price point if there's something there. Maybe not sure. Maybe, yeah, around the 24-hourly time point seems to be a few hours ago, about a day or two ago, some significance. But certainly for the next 60 minutes, there's a significant turning point within the pound dollar. Okay, so with that I conclude, and I just want to point out again, go to the Autochartist. Go to the Autochartist website, go to the volatility analysis section on the Autochartist website and look at the information, look at whether the stop losses you're using are appropriate to the market you're currently trading, the instrument in the market you're currently trading. Errol, I think I've made it in time, right? I kind of did that in about 30 minutes with our initial delay.
Yeah, great. Thanks, Ilan.
I want to open up the floor to questions. There aren't many questions, so either that means nobody was listening, or it was the best presentation ever, and no one has any questions. Which one do you think it was, Errol? Do you think it was an awesome presentation?
I think it was very good.
Not even Errol's answer. Okay. Oh, thank you, Errol. Yeah. You can always trust your colleague to compliment you. Right? Okay. All right. So, okay. So, everybody, thank you very much for your time. This webinar will be available, I guess it's tomorrow, on our YouTube channel, and because you registered for this presentation, you will get a link by email. Again, it was an absolute pleasure talking to all of you. Enjoy the rest of your day. Goodbye.